Hi there, I'm Ben MacNevin from Montgomery Investment Management, and welcome to this week's Video Insights, and happy November. Today, I would like to briefly discuss the sales process of this year's biggest Australian float, Medibank Private. Now, there are typically two reasons that a company will come to market. Capital is sought to grow the business, or the founders wish to take money off the table. In Medibank's case, it is the latter. And with the government's budget position looking increasingly bleak, Medibank's owner has been keen to realise the highest price it possibly can. Yet many investors of the float are constituents who also desire a strong return by way of a lower entry price. So how has the government been able to successfully manage these two interests? By segmenting the retail market and the institutional market. Now, the sales process began with the retail market, and there were a number of factors that have worked in the government's favour. First, Medibank has a readily available market to approach with 3.8 million policyholders. Second, there is a common perception that assets that transition from public to private control will appreciate in value as efficiencies are realised. The strong retail demand for the Telstra and Horizon floats are particular examples of this expected value creation. Third, the government has thrown in a high dividend yield during the first year of listing to sweeten the deal. Now, this has resulted in such strong demand that the book was covered many times over, even before the institutional market was engaged. But the government requires sufficient interest from institutions to ensure a healthy secondary market upon listing. So institutions were initially advised to bid within a range of $1.55 to $2. But having established a strong retail market, institutions were advised to bid above this target range. The fear of missing out can have a powerful psychological effect on human behaviour, so the mere suggestion that institutions should bid above the range caused many to resubmit. Because of this size and quality, Medibank Private was always going to be keenly sought by the institutional market, as many are mandated to minimise their funds tracking error against ASX indices, and Medibank could be a top 50 stock. But as an additional measure to generate secondary market support, the lead managers were incentivised with a selling fee of 0.3% for Australian institutional investors and 0.6% to institutional investors outside of Australia. The result? Well, the government is going to pocket around $5.7 billion, and institutions are paying a 7.5% premium to the retail investors. The government has effectively created a short squeeze for the institutional market. So any investors that participated should be looking forward to receiving a handy Christmas present. We are expecting Medibank to list at a healthy premium. As for Montgomery's investment in the floats, well, at this stage, we are fortunate to have received a respectable allocation, so watch this space for further insights. That's all we have time for today. As always, don't forget to follow us on Facebook and Twitter.